coming in, right? I just wanted to say of welcome. And of,
Do you want to say a word or two about Old Penguin? Or we may hear Ryan. Okay, Ryan can do that. Okay. Fantastic. Great. So let me just drag the chair so we'll be sort of closer to the mic. Okay. Do you want to hit like the record button or should we do that?
It's already recording.
Oh my God, that's going to be amazing. Good, great. So,
I don't know how much we'll catch, and by the way, I'm not editing this, so whatever noises or sounds or coughs or edits or bloopers that we make, that's gonna be it. So
that's perfect.
Why don't I do a proper introduction?
Yeah, let's do that.
So hello everybody. It's late at night on the East Coast. I'm recording live from some city behind me. If you want, I could do a whole show on just going from green screen to green screen and traveling around the world. But we're trying something new here. We're going to try to see if we can make this interesting. United States is a large country. So much cool Insurtech stuff going on. East Coast, West Coast, Chicago, middle of the country. Just pretty much everywhere there's a lot of positive stuff going on, and it's too difficult to get everywhere. Yes?
Can we start with your name?
Nick Lamparelli. Hi, everyone.
This is Nick from Insurtech. Yes, now please continue.
Okay. So yeah, let me give a proper introduction to myself. I am the host of Profiles and Risk podcast. A lot of you will know me from articles I've written on Insurance Nerds. I also am an Insurtech entrepreneur. I have co-founded an MGA. We've been in business for almost 2 years, actively writing flood coverage and trying to make a difference there. So I think I kind of know what I'm talking about. But in general, there's so many conferences to go to, so many cool Insurtech things that are going on, too hard to get to them. So we're going to bring it to you. We're going to try something new. And on this, for the LA Insurtech scene, which is on the image below me on the recording, we're bringing the man, probably one of the most influential people in Insurtech. I honestly can't think of another person that is more influential in my eyes, just in terms of messaging, right or wrong. Even though he's a Buffalo Bills fan, you just can't ignore what he's bringing to the Insurtech table. My man, Ryan Hanley. So let's try this out. How about an applause for Ryan Hanley?
So I want to apologize first and foremost to everybody. I woke up this morning with the intention of being there in person, and it's somewhere around 2:30 a.m. I got a text message that said, your flight has been canceled. And when you fly out of a little podunk airport like Albany, New York, which has 7 gates, if you miss your flight, there's not really another option. So the only other option that I had was to get there at 7 p.m., which wouldn't have given me a lot of time because I needed to take a red eye back to Columbus, which is where I am tonight, to be at a meeting for Bold Penguin. So I apologize for not being there in person, but I am still glad that we get to connect here. It is my great pleasure, and I want to say thanks to Nick for hosting this and virtually, and thanks to Gilad for hosting it in person. And I look forward to this. I'm ready to rock and roll. And also, it is bonkers that I have any say in this whole Insurtech thing because I don't actually know how to code or create really anything. But I do love our space, and I think that what we do is incredibly important. And my perspective, and I hope this comes out over the course of our time together this evening, is that we need to take what we do very, very seriously. And I mean that in the most in every manner. Like, this is not about users. It's not about growth. It's about making sure that when really, really messed up things happen, like a hurricane or an earthquake or a tornado or a fire, that the people that we protect get reimbursed, that their lives get brought back to as close as possible financially. We can't help them emotionally necessarily, but we certainly can help them financially. And I think that is a burden that is often lost when people first walk into our space. So that is the perspective that I try to take in Insurtech, is that the technology all of you are creating is incredibly, incredibly important. But we can never lose sight of the fact that what we do is vital to the ecosystem in which we operate. And if it becomes all about users and growth, you have completely missed the point. And I actually will fight for the damnation of your organization. So.
Okay, so show of hands who never met or heard one of Ryan's speeches or video or read his books or anything like that. Okay, so let's start a little bit about you. A quick introduction, you know, who you are, what you are, and how come you are one of the more vibrant, energetic, that we already figured out, and influential people in the industry.
Yeah, so I started as an independent agent. My wife owns an independent insurance agency in the town that I live, which is Albany, New York. It's a 13-person independent agency. They do about $3 million a year, so they're incredibly profitable. They break every rule, which all of you are trying, probably have written articles or at least pontificated to your staff about why business should not be able to operate the way they operate. They break all those rules. And trust me, as much as it would drive you crazy, if you knew what I was talking about, it drives me crazy. That all being said, I learned exactly what this business is about by putting on rubber sole shoes, walking the streets, selling insurance door to door, hand to hand. You know, when I left that business, I left for reasons that aren't necessarily important, but at the time, it just made sense for me to move on. From there, I joined an organization called Agency Nation, which was owned by Trusted Choice and the Big I, which is the largest trade association of insurance agents in the entire world. We built a digital media company helping independent agents understand technology, marketing, sales, and everything that goes in between. We grew that in 4 years from 0 to over 500,000 unique audience members. So that was pretty fun. We put on the Elevate conference 2 years. They're doing it a third year this year without me, obviously, but I was part of putting it on for the first 2 years. So that was a lot of fun. And from there, I moved on, and now I'm the Chief Marketing Officer of Bolt Penguin, which is the player in the commercial insurance space. There's lots of other players, but because I have the stage right now, I can say the player.
That's right. That's right. Can I show you something?
Of course.
Okay. Hold on. Let's see if I can figure this out. Here it is. Okay. Can you see this? See that?
Yeah.
So this is from Tony Kanyas today. Start with why. And he asked me, Nick, what's your why? And he kind of guesses what my why is here. So I'm going to show you what my why is, Ryan. Does this sound familiar?
Yeah, it does.
It's exactly what you said. That's the whole point, right? I don't know the members of the audience. I just can't even say enough about what Ryan is describing here. If you're just trying to make a product, okay, that's one thing. But there's a very unique opportunity here. We're filling an incredible niche in the global ecosystem. Basically, shit can't happen unless risk can be eliminated. But our goal really is to bring people back to normal.
This
however
is
that
the
is.
1800s. So this is the thing. So everyone wants to shit on insurance, right? Oh, my $400 claim took 3 days instead of 30 seconds. Okay. here's the point is 400 years ago when your house burnt down, the entire community rallied around you and cut down trees and rebuilt your organization. Nick, you have clicked on Justin's thing, so it's showing nothing, man.
Oh.
So the entire community rallied around your house and rebuilt it. That's not the case anymore. If your house burns to the ground and you don't have insurance, your house is gone. Everyone's like, I'm really glad that wasn't me. And they go on with their lives, and you don't have a house anymore. Yep. So insurance is literally the fluid that keeps the entire ecosystem running. So the reason I say that is it is very important when we're talking about insurance technology to make sure that we have a primer, we have a base point, we have an understanding of what we're getting into, because I have seen a lot of, I'm going to take a broad generalization and say, MIT a-holes who come into our space and say, I'm going to do it better than you because I understand behavioral economics, or I understand, HTML5 or whatever. And that's all great, right? I am glad that you have an advanced education and that you are intelligent. But what I'm telling you is, I don't care what you come at me with. If you don't respect and understand what we are doing in the insurance space, I will dash you across the rocks every single day. And it's happened over and over and over and over again. And I have watched Insurtech darling after Insurtech darling get destroyed because they didn't respect what we are doing. Now, here is my point in telling you this. It is not to be negative in any way. What I'm saying is, if you are smart as hell and you know things that I would never know, I cheated my way to a math degree because I limped out of college with an engineer, couldn't hack it in engineering, and basically am self-taught in marketing. So, and I don't know anything about coding or any of that crap. What I do know is this, is that if you have those skills and you respect the fact that insurance is not actually broken, it needs to be innovated and iterated upon, the opportunity for you and your organization is limitless. But if you're going to come in and pound the table and say, insurance is broke and I'm going to fix it with my renter's insurance program, then you are toast. I will eat your lunch. I will literally take your lunch bag from you and I'll eat your lunch in front of you and I'll make you watch me do it. Right? And I'll be mean about it.
I'm going to help you here. Because listen, I've dealt with enough tech people that have come into the space. There's, what they're going to come back and they're going to say, every industry says that. Every industry that we've disrupted has said our industry is different. So I'm going to start at brass tacks. I'm going to start right from the beginning. Acquisition of a customer, right? Yeah. We're going to put up a fancy digital website and we're going to have we're going to ask 2 questions. What's that?
I'm going to talk about that tomorrow at Hartford, Connecticut. But yeah, go ahead. And then
insurance is difficult. So we're just going to put up a fancy digital website and people are going to come running to buy our product. Ryan, explain why it will not work that way.
So there's a couple things here. So this has been tried many times. Here's the rub on this, is that there has not been a case proved yet in which you can profitably run an insurance organization in which humans are not part of the sales process. There hasn't been a case, right? Lemonade can't crack 139 on a combined ratio. For anyone that doesn't know what a combined ratio is, that is drastically unprofitable. So you look at a company like, what are some other examples of this? Now my brain isn't working because it's so late. Google Compare. 3 years ago, Google takes an organization called Google Compare, which was founded in the UK and was incredibly profitable in the UK, and takes that organization and says, we're going to take what we did in the UK, and they were profitable and they were gaining market share, and it was a viable entity, and they said, we're going to plug that into the US market. makes sense, 100% understand. They did it first in California and expanded rapidly to, oh geez, I want to say Illinois, Texas. Does someone know the answer? I hear someone talking.
It's 7 to 10 states, and at the end of the day, they close it. But yeah, they continued to Texas. Then they went up the Hale corridor or the Hale alley.
Yes.
Tornado Alley.
The issue was that when someone came to their site and went through their form, they converted online only 8% of the time. When a human agent was involved, be it call center or whatever, they converted at 47% of the time. Now here's the issue. Human agents, for the most part, and the technology surrounding most organizations that use human agents is just terrible, right? I mean, most Main Street agents are just atrocious at selling me business. So there's this weird space that's developed. And this is where I get excited about our business, is how do you take really smart technology that drives innovation, that drives efficiency, connection, and plug it into, I guess what I'm calling like a human optimized model, like a model that plugs the human in the moment when they're needed, right? So you don't need a human to do a lot of the initial lead gen stuff. And you don't need a human to do a lot of the real like transactional stuff like certificates, like policy changes, car changes. I mean, a lot of that stuff could be optimized pretty easily. But there are moments when a human is necessary in both the sales process and the retention process that when you compare businesses who do this well, you go from unprofitable to profitable. So that's where I see this really exciting mashup of technology and human beings. And that's the part of the industry I'm getting really excited about, is like, where are these human optimized moments? Where are these moments where you can inject a human being, whether it's an agent or call a customer service rep, or however you define or delineate that person's position. But where can you add that element of humanity into the transaction to create trust, respect, and ultimately longevity of relationship? Because as most organizations who start selling insurance from a retail side learn very early, you can't make money on a first-year revenue basis. It's very, very difficult to make money on a first-year revenue basis, right? It's about year 2, year 3, or year 2, really not. It's really about year 3, year 4, year 5. Yep. That's where you make your hay in the insurance space. Yep. So that is what has me really, really excited about this space, is technologies that create almost like to use a science fiction term, like a cyborg type organization, an organization that where the human and the technology are integrated in a way that creates a quality customer experience. Well, not cutting one out, or the other way is completely going old school and being like, I'm just going to go the traditional route. Like, that doesn't work either.
Yeah. So true or false? Google search ads for insurance, expensive. True or false?
I'm not going to use the word expensive because it depends on a lot of things. So I'll tell you that if you're using a combination of Facebook, Google display ads, and YouTube ads in combination with a solid content campaign, referral campaign, and retargeting, like if you're doing that in a smart way, I don't want to say expensive, because expensive means, they're not worth the value. I'm saying if let's say you spend $60 on a Google display ad, but you're converting a high quality contracting account that stays with you for 5 years, not really expensive. I mean,
okay, fair.
So I think it all depends on the sophistication of your strategy. The hard part is, in order for that, what I have not seen work yet, this is kind of the point of my diatribe thus far, is that what I have not seen work yet is a Google display only, a digital only acquisition strategy effectively retain business long enough to create a profitable entity, right? So Google,
well, that's what I'm getting into.
To phone call, to talk to human, okay, to conversion is a much more effective path today I just have not seen the other way work, I guess is my point.
That's what I'm trying to get to for the audience. Where I'm going with this is, it can be expensive. It could be valuable, but you hit something on the head. It depends on who you're converting and how you're converting. So my next question would be true or false. The type of people that generally Google search to shop for insurance, true or false, understand insurance.
I don't think it's fair to do a true or false. I don't think it's fair to do true or false. So
I'm the attorney here. This is like yes or no. You have to answer yes or no.
Yeah, false then. False.
Of course.
I'm going to say false. I'm going to say, wait, we said understand? I'm going to say true and false. True and false.
That's
Nick.
the weasel. That's
Because
the weasel.
You're
weasel
giving me
way
a
out.
loaded question. You're giving me a loaded question. This isn't CNN or Fox News.
I'm
This is
leading you.
Insurtech LA, brother.
It's not a court of law. I'm leading you.
So what I'm saying to you is that well done intention-based advertising, which leads you to an actual relationship with either whether it's a well done call center or it's an actual agency, that leads you to some type of relationship based in humanity, not just an app or not just a button at which you click and have a policy. If intent-based advertising leads you to a person, I have seen that work at scale. I've seen it work many times. The problem is it's hard, it takes time, it takes testing. And if you are slave to a venture capital organization that is looking for rapid and widespread growth, oftentimes the testing that it takes to make that strategy work is going to take too long. So if you take a large amount of venture capital money that's going to force you to grow at scale in an environment at which you don't understand the people that you're bringing in, and oftentimes you're bringing in people who don't understand insurance and aren't valuing the relationship and aren't going to stick around, what's going to happen is you're going to get a huge run up in policies. Everyone's going to write articles about you, Coverager, Insurance Journal, CB Insights. It's going to be great. And then a year later, when all those policies either non-renew or don't renew, and you're still running on the hamster wheel of new business acquisition, you're going to look around and go, oh my God, I got to fire half my staff.
Yeah, but that's the difference between marketing towards inside the industry. So coverage, which is great, CB Insights, all of that's huge marketing that is aimed at the people within the industry. The big question, as you just mentioned, and we're going to do a quick round here, it's all about what's the marketing that you need to do to get the customers, because that's what you care about. Because most of the people, you go as an agent, they will tell you, you need to bring the 50 people, go to your church or whatever that may be, sell to your family, sell to your friends. But first of all, you realize that you don't have too many friends who are willing to change their insurance company. And then, okay, now what? How do you sell to the people who are not part of your church?
So
That's true.
I have an answer to that. I heard someone else has an answer.
Yeah,
I'm interested in
Just one second. We're sorry, we have mic issues.
So I have a question. You keep saying the person you're selling to. So are we assuming personal insurance? Are we assuming commercial insurance where there's going to be a risk manager involved? Are we assuming small business, sole proprietor, BOP type programs? Who are these people you're selling to?
You're always selling to a person. That's like advertising and marketing 101. Not to be, I don't mean to be offensive when I say that. I just can barely hear you. I would just say you're always selling to a human being. Some person is always going to make the decision unless you're talking to a procurement organization. So if you're talking to a group, a procurement group who's purchasing insurance and there's 5 people or 3 people making that decision, you are not going to be digital advertising to that group. You're going to have a human being who's working that group. You're talking high mid to large scale accounts. And I mean, you might do some branding for your shareholders, but you're ultimately not going to be doing Facebook ads to drive that type of account in. Certainly not on a scale that makes Facebook ads worthwhile. So I'd say you're always marketing to a person. You're marketing to the person that's making the decision. And you want to do that based on intent, based on need, based on desire. What are the things that are impacting them? Today, you know, if you're looking, you know, if you spent 15 minutes on Twitter today and you don't have an EPLI policy for your business, you're a moron, because the woke society, the alt-right and the far left and all this crazy stuff, like this is all stuff that's going on in conversations inside your business. And if you don't have an employment practices liability policy that covers the fact that people inside your business are offending people inside your business, then that's a struggle. So what I'm saying is you could speak to that type of thing by creating ads, by, you know, all kinds of stuff. I mean, we don't need to go, we can get super technical on how you develop the marketing advertising strategy to drive those people in, but just kind of advertising marketing 101. You're always speaking to a person, you're never speaking to an entity. Some human is always making that decision.
Yeah, so just a quick, you know, to feel the temperature of the room. Who is an agent or a broker actually doing the hard work of selling? Okay. Trying to sell or selling, yeah. And of course, one that supports the people who sell. I see 2 lawyers or more? Just 2 lawyers. Deloitte, you have your own presence here. What am I missing? IT. Okay.
Vendor, third-party vendor.
You guys, I'm sorry. A carrier, which company? Topa, love it. And the gentleman with the red tie. Consultant. I'll put you with what type of consultancy? Or do you want to be in the bucket with Deloitte?
Yeah, consultants don't want to be in the bucket.
Put him in the salesman bucket.
But I
Perfect.
represent carriers and technology.
Fantastic.
Nice.
So we have a very interesting people here. Every time we have something actually very close to whatever we have here today, but that's all. And I think that for the, you know, the agents and the brokers who are in the room, and later on we'll hear the podcast or vlogcast or whatever you call this now. Yeah, the marketing strategy will be very interesting because you took that, especially the content generation and all that stuff, to the next level. And I imagine that you can hear anything that I say.
I can hear everything you're saying.
Yeah, we can hear everything you say. This is what I tell you about marketing advertising. That's the easy part. And I don't mean to say that lightly. I really don't. I mean, if you know who your customers are and you understand what their needs are, then the message that you craft, either it should be easy for you to create or easy for you to hire someone to create that message for you. The really hard part about this is the human part, right? Managing the people who take the phone call, who deal with them, who you know, that's a really hard part. There's a couple of really hard parts. Another really hard part is if you are driving people to a form, creating technology that understands business class is actually very difficult, surprisingly. I'm sure someone has figured it out. I just don't know who it is yet. It's a difficult thing unless you're creating industry class specific landing pages, then it becomes easier. But if you're driving people to a general form, understanding business class. So the number one knockout question in all commercial insurance forms is business class. That's the number one knockout question across the board, across the industry. So it's really hard for consumers to understand who they are in terms of insurance, right? They understand who they are in their own eyes, but that's very difficult for them to understand when they're filling out a forms. That's a hard part in this. I just think the marketing and advertising part is the easy part. Like, just answer the questions, the common questions that the people who you serve have about the product that you're delivering, and answer them often, and you'll do quite well. The really hard part is all the other stuff, making sure they're properly covered, making sure their needs are met on a consistent basis post-sale, staying in touch with them.
You skipped over the sale, and I was hoping you would go there, because to me that's the hard part. The hard part is getting someone to write the check, to give you the credit card, to say I will buy this from you. Like, you know,
hire a bunch of killers, you'll be just fine, man.
We can use Lemonade as an example, right? There's what's that?
Marta, RSVP. Marta is a Excel or now is AXA Ventures.
Yes.
So she RSVP. She didn't show up. So feel free to talk about Lemonade.
I wasn't going to say anything negative about them. They've had success growing, right? So they've had success selling. Their niche, though, their niche is insurance is bad. We're a tech company. Come join us. It's a low dollar transaction. That's been the message. They've been successfully able to get people in, successfully be able to get people to whip out the credit card. They are the exception so far.
Hold on, I want to push back on that. So I'm going to push back on Lemonade has figured out sales. So here's what Lemonade is.
No. What I said is Lemonade has been able to make sales.
Okay.
I didn't say they figured it out because their market niche.
Started
is tiny.
that diatribe off of sales is the hard part. Let's talk about Lemonade. So here's what I would say about here's my perspective on Lemonade. There is literally nobody better at defining what the pain point is for the type of consumer in which they're trying to write business. If you are trying to sell anything to anybody, Lemonade is a case study. From the standpoint of messaging, right? They have dialed in so succinctly and so intelligently to the pain points of the people that they serve, right? Which are urbanites, broad sweeping stroke, younger, say 45 and under, who don't currently have insurance or don't currently value insurance, right? So if that's broad sweeping stroke, it's much more nuanced than that.
That's my message. They're able. They had a game plan. They have been successfully able to execute on that.
But let's talk about the business side of it. So
I'm going there. Relax, man. I'm Belichicking this thing.
Yeah. I'm not willing to wait for you to Belichick.
Am I moving too slowly? Okay, let's go into the business part of it. Yeah. Tiny niche market in a product line that's super competitive, tiny margins, right?
Why do you say tiny niche market? I'm interested in that perspective.
Renter's market.
That's not a tiny niche market. There's
tiny
30 million renters in the United States.
Yeah, all paying $100.
Yeah, but so it doesn't make it tiny. It just makes it small premium.
Which is tiny. That's how we measure stuff.
Okay, so number of users times total potential revenue.
I'm talking premium
would be small. Yes.
I mean, at the end of the day, if someone's
cross-sell to auto,
someone's dropping $100 million in your company, you need a ton of premium, and you need to be able to wring out profit from that.
Yeah, well, those people put that money in them because eventually someone larger is going to buy the technology.
Okay, but that's beside the point. The point is they've identified a niche. They've been successfully able to extract premium dollars. Now let's get into the business side of things, right? Unsuccessful, being able to control their losses. Something that if you read my Insurance Nerds articles, I predicted that. Why? Because they don't view claims the way insurance industry views claims. To them, as their message holds, in the insurance industry is bad, and they're going to be good.
How do we operate that?
Okay.
We are having small difficulties, so we have that one. Okay, maybe.
Does this mean I have to edit the video?
You're an expert.
Apparently I'm an expert.
Where did I drop off?
You're the insurance wizard of New Hampshire. Just roll from there.
So, they've been able to successfully execute their business model, but the problem is that claims.
They can go on. It's fine. I don't want to win it for them.
You guys can't
Can
hear
you guys
us?
not hear us? What's the issue?
Mm-hmm.
Can you not hear? What's happening?
I don't think they can hear us.
The screen, no, we are not. We had to. The screen just closed on us.
But you can hear us.
Sort of. Wait. It's on. Somebody is off. Yeah, that's projector too. That's projector.
Up into the ceiling, and the camera just shut off. We're reconnecting you. We're doing our
Yeah,
best.
we don't need this one.
Okay.
All right, to give it, we
That's a
see
wide
you
orientation.
looking at your face right now on the laptop, but we can't.
Okay, we're going.
We can't hear you.
Technology, Insurtech. Hey,
Yeah, and you making fingers.
Okay.
that's
All
it.
right.
And bye.
That sucks. Okay, in that case, we're going to do it this way for now until we figure it out.
Right.
Right before we lose them.
Yeah.
Right.
All right.
Okay.
That's-
Can I continue?
Yeah, go ahead, man. We are improvising here. It's
Okay.
Insurtech.
Fine. So Lemonade has executed on their business plans for all the insurtechs that are listening to this. They found their niche. They've executed on it. Now we get into the business side of things, right? A lot of money has been dropped in there. So Ryan, they didn't respect claims. We talked about outsiders coming in and they view claims as, hey, wait a second. You guys don't pay your claims. We're going to pay our claims. And my point was, well, if you pay your claims, you have to have an appropriate premium. You can't say the industry doesn't pay their claims and that you're going to pay them and then charge 50%, 80% less than the industry. That's impossible. Like you're talking about a line with very thin margins and you've just made them thinner and the loss ratios prove that. So that's one of the business aspects I wanted you to talk about.
Yeah. So I'm just going to attack. I'm going to say the exact same thing you said from a slightly different perspective, which is they are doing a very classic insurance carrier activity, which is they're buying losses, right? So carrier enters a new market. They come in with low premiums. They buy up accounts. And then over time, they raise premiums. And the reason they do this is they need to buy market share, right? They need to get into the market. They need to understand the market. And you can't do that until you're actually there. And the only way to get accounts on the books at scale so you can understand what those accounts are is to underprice the market so you can rapidly grow your book of business. And carriers who have been established for a while and understand claims and underwriting best practices do this for usually a short amount of time, and they do this in certain areas strategically in an effort to just kind of test the waters, right? They're just poking and prodding the market to get a feel for what's happening and how claims happen and the disposition of that environment. So what's been interesting for me, and you've written articles about this, I've written articles about this, is a $65 renter's insurance policy in a market in which every other carrier is charging $185 is a fantastic strategy for new business acquisition. At some point, your premium has to go up because the issue is so this is why I started our talk today with the idea that I do not believe insurance is broken, right? I know that McKinsey likes to put that in the headlines of their articles because they've become the BuzzFeed of the insurtech industry. But unfortunately, that's not the case, right? I mean, we've had multiple hurricanes hit the United States and these towns are being rebuilt. And the only reason they're being rebuilt is from insurance dollars. And in fact, it's become harder and harder for the media to find cases in which claims haven't been repaid or people haven't been brought back, at least financially, to the place they were before, because carriers consistently get better and better at paying claims, especially with new technology in the claims industry. So my point in saying all this is that I think that if there was someone inside of Lemonade who could help them to, so first, I truly and utterly believe it's just a technology play. They are building up a user base that they can then sell for more than they've received to someone larger. Travelers, Hartford, one of the big reinsurance companies, who knows? Someone else who, Amazon, who the heck knows? Google, it could be anybody. It doesn't really matter. I am 100% positive without any inside knowledge that that's what they're doing. Because their strategy from an insurance carrier perspective at this point, at the time that they have been in the markets they've been in, would be to start retracting those premiums, right? The premiums would have started going up in order to get back to a place of equilibrium. Like New York Central, I'll give you a great point. New York City, right? So Lemonade launched in New York City. It's the greatest town on earth. And here's the reality of New York City. New York Central Mutual has been writing insurance in the state of New York since 1865. They are one of the most consistently profitable organizations from an insurance perspective inside the state of New York. The only state they write in is New York. They have consistently one of the highest claims ratings, and they also are consistently profitable from a combined ratio standpoint. A standard homeowner or renter's insurance policy in the city of New York is around $175 with New York Central Mutual. This is a company who's figured out how to pay claims and be profitable in New York City, in Manhattan. They figured it out. They've done it for close to 200 years now. They figured it out. $175. Lemonade's charging $65. Okay. So I can understand there might be small variances from a technology standpoint.
That's what they actually said, was they can charge less because they are a digital company. So it's the Insurtech thing, a tech company coming in.
I think that's complete and utter bullshit.
Of course it is, because the vast majority of the losses are going to come from claims and not the overhead that they have. That was my issue.
Yeah.
That is what I'm trying to get the tech folks to understand when they come in, is you can come in, you can streamline everything, but at the end of the day, you still have to pay claims.
Yeah.
And there's absolutely no way you can issue a $10,000 policy in New York City and charge everybody $65. The numbers will not work.
Yeah.
It's impossible.
So here's one way why I thought if they eventually started to increase their premiums, they could consistently provide a lower price than, say, New York Central Mutual, okay? Here's one way why I thought it was possible. New York Central Mutual average liability on a renter's insurance policy is $300,000. Lemonade writes you a comprehensive policy at $100,000 liability. So I had a client of mine have a small electrical fire. He had a lamp like this one right here, which you can't really see. He had a lamp in his apartment that the cord burned up his wall, burned the 3 apartments above him. That was a $775,000 claim for a tiny little electrical fire, but it was in a high rise in Manhattan, $775,000, which means it was $275,000 more than the $500,000 limit I had. Thank God his parents had an umbrella with New York Central Mutual, and because they were such a good company, they ultimately covered the claim in full. But here's my point in telling you this, is that most of the liability that an insured takes on in a renter's insurance scenario is actually in the liability portion of the policy, right? $10,000 in coverage is nothing. It's a drop in the bucket. It's nonsensical to put the quality of your policy around the property coverage when it's only $10,000. Where you are going to get hammered, both as an insured and an insurance company, is in the liability portion. So I thought that if they could convince enough people that $100,000 is enough liability, which is unequivocally not, then they could consistently keep their rates down. That all being said, I think if you were to take Lemonade, throw some human call center people behind Lemonade, push people through their technology, which is absolutely fantastic, and write a slightly better coverage with better pricing, I think their front end tool is bananas smart, and their marketing is so tremendous. I just feel like they have half a business. I think they're like this close. Mm-hmm. And that if I were an insurance carrier, I would look at the product they have and I'd be like, I would buy you for, I don't know. So we're talking crazy money, but I think as far as a front end marketing and lead acquisition tool, it's absolutely phenomenal. It's the best. No one is as good as them.
Yeah, guys, can I move the discussion from New York to Columbus, Ohio?
Oh, sure. Yeah.
Bald Penguin?
Yeah, let's talk a little bit about Bald Penguin. And, I must tell you that I do appreciate Lemonade's marketing ability, the fact that we are talking about them and the way that they rode the State Farm anti-bot experience. But let's focus a little bit more about Bold Penguin. And,
Oh, yeah.
you know, besides saying thanks for the pizza that you guys sponsored.
Who is Bold Penguin?
Yeah, who are they? Who is
So, you know, the interesting part about Bold Penguin, I'll give you guys a little context to my own story in joining Bold Penguin, and hopefully that helps you understand what it is, because I'll give you the very detailed description of Bold Penguin, but I think it will sound very salesy, and I would rather that it didn't, because I believe in the tool very strongly. So when I left Agency Nation, I had been there for 4 years. During my time there, I was able to serve, educate, interact with, and this is not a joke, more than 2,500 independent agencies. So I saw everything from one person startup scratch shops just trying to get by to having detailed discussions with you know, the Brown and Browns and the Hubs and the Heffernans and the Milos and the Gallaghers and it's all amazing, right? I got the full spectrum. So when my time was up at Agency Nation, I had no intention of joining another company, absolutely none. My intention was to take the expertise that I had gained, start a consulting company, and that was going to be my future. And I was very happy to do that until Ilya Bodner, who had become a friend of mine over time in just being in the space and being around Insurtech and agents and all that. He said, hey, well, before you do that, why don't you just take a trip to Columbus? So not wanting to miss an opportunity, I decided to take a trip in here and get to know what the product was all about. I was familiar with the product, but probably not as familiar as I should have been. And I hadn't actually spoken or learned about the product in probably about 6 months. So when I walked in the doors at Bold Penguin on the 15th floor of the Chase building here in downtown Columbus, I was absolutely blown away. And the two things that shook me were, one, that they were managing as efficiently as I had ever seen a 35-person contact center that had a dynamic scripting software that allowed them to, in all the ways that I told you need to talk to a human being, they were optimizing that interaction in a way that I had never seen before, right? So they were building trust, they were building relationships, they were building the human connection with these small business owners, because Bold Penguin primarily, I shouldn't say primarily, only works with small business, and don't overly define that term. They were building relationships with small business owners in a way that I'd never seen before, because it wasn't, I'm going to take your information, scribble it down on a piece of paper and pass it along, which is the standard independent agency way. They had a dynamic scripting software that was changing the script for the contact center employees as the people answered questions. So I'm an HVAC contractor. Okay, that's great. But I have 4 employees. Well, that drastically changes the script because now I need to ask a separate set of questions, which include commercial workers' comp. I'm sorry. And I was blown away by that because I don't know that exists in the marketplace. I know there are other organizations that have contact centers, but I don't know that they're as sophisticated as what Bold Penguin has. Certainly not as dynamic as Bold Penguin has. And the case for that is 2 of the largest insurance carriers in the entire world use our contact center and our contact center technology to run their own contact centers. So that was the first thing that blew me away. The second thing was this problem that I addressed early in our conversation tonight around the idea of understanding business class and understanding the questions that carriers use or that carriers require in order to provide a quote for each business class. So what Bold Penguin does, and if you have much more detailed questions, there's a very good-looking gentleman sitting behind you by the name of Neil who will answer all of them. He's actually in LA. Look the other way. I think he's the other way, but he's there. Here's what happens in a nutshell. So someone comes and has intent, right? Someone has intent to buy insurance. We'll put that right here, okay? Human agents in the middle, and we'll take the quote is over here. So what's happened traditionally is someone shows intent, they fill out a form, they call a phone number. There's a million ways that they can show intent. But once they show intent, there's all this garbage in between and time in between showing intent and actually contacting a human, right? The human has to call them back. They got to schedule a call. They got to fill out a form. That form usually has 42 questions. They don't answer all the pertinent information. You know, there's all this kind of stuff. Well, someone shows intent in our ecosystem. Our contact center warms that client up by asking them a dynamic series of questions, and they deliver that small business owner live on the phone to a human agent, to the agent that's going to write the business. So I'm at my desk and my phone rings. Hey, this is Ryan. I have a small business owner. His name is Jeff, and he would like to talk to you about his HVAC business. That's wonderful. And boom, now Jeff's on the phone with me. That's tremendous, right? Well, at that same time, all the information that was collected by our contact center is piped right into that agent's computer. So now I'm staring at the information. I don't have to enter it again. I don't have to ask a second time, what's your address? How many employees do you have? How long have you been in business? What's your revenue? I don't have to ask any of that again because it's immediately sitting inside my Bold Penguin terminal. Well, that would be amazing if that's where it ended. But here's what kind of took me to the next step and ultimately took me out of becoming a consultant like that gentleman in the back and turned me into the chief marketing officer of this company, which was at the same time that information is piped into my computer as an agent, I am also getting real, live, bindable quotes delivered to my computer. So think about that for a second. So I'm the agent. I wake up in the morning, I go to work, I flip my little switch, 8:15, my phone rings, and a Bold Penguin contact center person connects me with a small business owner in a class of business that I want to write. And instead of having to re-enter all the information into all the different carrier systems that I would like to quote, the quotes from those carriers are piped into my computer, and I'm sitting there and I'm going, hi, Mr. Business Owner. I'm staring at a quote for $1,700 for your HVAC business for general liability. Does that sound like a good quote for you? It does? Okay, great. Click, click. All I need is your credit card number and I can bind it. It doesn't exist in the marketplace.
Ryan,
And that's what blew me away, is because I know that that doesn't exist in the
hey,
marketplace.
Ryan, it's Neil. I just
Yeah,
want
you're about to blow me up, aren't you?
No, I'm not. No,
No, I'm just playing. I'm just playing.
Seriously, I just joined Bold Penguin less than 2 months ago, almost for the precise reason that he described, right? I've been working in Insurtech this is my third Insurtech. I saw the same exact thing. I saw this process. I walked out and I said, wow, there's nobody else doing this. But I want to add one kicker on what he described, and that is, he mentioned it, but I want to emphasize it. That agent, that broker who's getting that phone call, doesn't even get the call unless they had defined themselves as interested in that class of business, in that location. They tell the system what their appetite is. They're not even going to get the call unless they've defined themselves as interested in that. So when they get the call, we know for a fact that's business that they will write. So you can only imagine what the placement, the close rate is, because they're not getting garbage. They're getting something they've defined. So essentially, both sides of this equation tell the system, the marketplace, the engine, the brain, what they're interested in. And we're doing matching. Think of it like Match.com meets eBay, right? There's a profile. You answer a bunch of questions, and hopefully you find the love of your life.
It's like Tinder meets MySpace.
Wow.
So let me, so there's a very large, we'll call it a $33 billion carrier in the, we'll say east of the Mississippi River. And here's the problem that we're solving for them. the reason that small commercial at scale becomes unprofitable, because traditionally it has been. If you would talk to a top, say 150 broker, oftentimes they don't actually pay commission to their agents for any policy under 5,000 in premium, because at scale, small commercial becomes unprofitable because for two reasons. One, it takes oftentimes just as much hand-holding as a policy that is significantly larger, we'll say 50 to 100,000 in premium, okay? So 100,000 in premium and 2,500 in premium often take just as much hand-holding, or close enough that, you know, you don't want to deal with the 2,500 in premium. The other side of it is, the more time you spend on accounts that you can actually write, all that time at scale adds up and creates unprofitability. So if you're just one agent sitting in a room, you'll try to quote everything because you're one agent in a room, and you don't have to make that much money to personally drive enough revenue that makes you happy. But when you're an organization of 100 agents, every single account that comes into your office that you can't actually write, that doesn't fit your appetite, decreases the potential profitability. So, okay. So what we're doing for this organization is what we like to call our triage tool. There's a much more technical term, but essentially we're doing real-time triage of accounts. So an account comes in through any number of 100 different ways in which they generate it, comes into their system. And what we're doing is figuring out, based on size, how old the business is, we'll any number of factors, as many factors as there are. We'll, at this point, we'll say it's probably north of 40. Though, you know, really there's like 5 to 7 that really make a primary difference in terms of underwriting. But class of business, years in business, premium employees, you know, et cetera. You can, that account comes into the business and they can just say, nope, we don't want that. We classically don't want to write it. It doesn't fit our portfolio. It doesn't help us with our contingencies. It doesn't fit our appetite. We're going to route that back into the Bold Penguin marketplace, in which place we sell it to somebody who does want to write it, and they get a small revenue split on that. But the point is not the revenue split. The point is that is time. Call it 10 minutes, 20 minutes, 5 minutes, half hour, however long it took that rep to sell that piece of business. That's time that they didn't spend talking to somebody that they ultimately wouldn't be able to write. And at scale, for a carrier-owned agency or for a large broker, that part of this product is just absolutely unbelievable. It's tremendous. It's a game changer. It is something, it literally flips the script on small commercial. It changes the game from unprofitable to profitable in small commercial. And that's the reason that I decided to join the company.
In terms of the business, what's bigger, the recycling of the leads or introducing the leads to a person?
When you say bigger, what do you mean? I'm sorry.
Business-wise, for Bold Penguin, right?
So,
I know that Ilya doesn't like the word lead, so I'm just trying to be provocative now.
Yeah, no, that's fine. So I'd say today, in terms of, I'd say they're probably 50-50. And I'd say over time, the technology portion of the company, the terminal portion of the company will probably become bigger over time, because ultimately that includes more of the organization's individual lead generation in addition to the opportunity generation that we do, right? So the marketplace is essentially an opportunity generation platform for a lot of people, right? They can buy calls out, sell calls, sell information in. But with the terminal, with the technology portion of our business, you get both the ability to buy opportunities, whether they're data or phone calls out, but you also have the ability to plug all your own opportunity or lead generation into the tool as well. So you know, once you have the terminal on your computer, you can put your own referral in there and get quotes. It doesn't have to come through a form. It doesn't have to come through our own phone call. You can do it yourself as well. So I'd say over time, the terminal will become a much larger portion of our business. Today, you know, 40-60, 60-40, 50-50, somewhere around there.
Well, that's ultimately where I was going in my initial my initial questioning was, for a lot of insurtechs, it's acquisition of a customer is the way Amazon acquires it. You just put up a website and people will come. And it's like, no, you need first of all, you need a strategy. It's basically, you can't deny the laws of economics when it comes to this. You need a certain amount of, you've got to fill the funnel. You need to be able to attract people, make them prospects, work them through the system, and it's expensive. It's expensive to do that. There's no easy way to do that. And what the advantages I see in Bold Penguin is that they've created that marketplace now, where they have economies of scale for both sides of the market, and they can feed and flow nicely. So for the insurtechs that are there, or anyone that's going to be listening to this video, customer acquisition is it's almost like an afterthought. Like, we just put up a website. If we have a better product or a cheaper product, people will come. And it's like, no, that's not how it works. That's not how people buy insurance. And you cannot change how people buy insurance because they've been buying it that way forever. It's not a product that is on a shelf. It's not a product people desire to buy. There's a sales element to it, and you have to have a strategy. And it's like customer acquisition is likely to be very expensive no matter what you do. It is for lemonade.
Yeah. Trust is still too much a part of the equation.
Of course it is.
Yeah.
You get to a certain dollar point. You mentioned small business. Why couldn't someone just put in all of your connections to human agents or human beings, put it all up on chatbots? Just make sure you have every possible question answered. The problem is that at some dollar point, people have reservations. They need to understand how does this deductible affect?
It's not even at a dollar point. I don't think it has anything to do with the dollar point. I think it's that I think there hasn't been a successful chatbot scenario, and I don't include Lemonade because they're unreasonably priced, right? They're buying losses. There hasn't been a successful chatbot that's outsold any traditional agency yet. Not in the U.S. Okay, so if you have an example that works outside the U.S., then I will give that to you. I'm saying inside the U.S., there's not a successful piece of technology that has outsold human agents today. I'm not saying that won't change. It very likely will. I'm saying today, the reality is trust is too much a part of the factor, or too much a part of the equation that you can't factor it in. You needs to be part of it. And that's the beauty. I mean, that's the thing is that I believe in a human optimized organization. So I believe that there are humans injected into way too much of the business today in many organizations, but that they still need to be there. So I think there's awesome technology. And the reason I love Bold Penguin is because there are certain aspects of the transaction that I feel they are removing the human and just optimizing where that human fits in. That's why I think it's really exciting. And that's why, frankly, like I said, 2 of the 10 largest insurance carriers in the world are currently our clients. And we're running, the technology is literally running their call centers. So it's like, these are people that are bigger, by all intents and purposes, they make our little 80-person company look like a pin. And we're literally operating their call center for them. The technology is phenomenal, and they've done it the right way, right? They didn't try to remove the agent. They just said the agent has a role. We're going to make sure that role is optimized and that they're given all the tools so they can sell that policy, sell it efficiently. And then here's the thing. As soon as they hang up that phone, they can pick it back up and sell someone else who fits the appetite that they want to sell, and not waste their time talking to somebody who they never have a chance of writing. And I think that model today, and probably for the next 5 to 10 years, at least, is going to be the model that separates the winners from the losers in small commercial. And if you don't think we are in the period of time in which, this is personal auto for small commercial. We're in inning 1 of small commercial, what happened to personal auto in the 80s and 90s. That's absolutely what's happening today. If you don't think that, then you don't understand the marketplace. Like,
Ryan,
what happened to personal auto in the 80s and 90s is absolutely happening in small commercial right now. We're in inning 1 or inning 2.
Ryan, we are reaching the end of this amazing talk, and I know that earlier in the prep call we talked about so many different topics that we may touch and not touch, and you know, from the agents who are sitting here and the other folks who are here, you know, between the marketing recipe for success and how to measure the success and the KPIs of a good marketing strategy. Sadly, we're at the end, so those are things that they can read on InSnerds and your blog. So for the, you know, it's the end. So for the next 5 minutes or 2 minutes, let's talk about what's your prediction for 2019?
What's my prediction? Give me just a little context because if you leave it open, I'm going to predict the Bills win the Super Bowl in 2020.
That works for me. So what do you think is going to happen in the insurance industry in 2019 based on what we have seen so far?
Yeah, I think there's going to be early separation in small commercial between the organizations that have their shit together and really start to apply pressure, understand the market they're serving and implement the technology, whether it's Bold Penguin or some inferior piece of technology to help drive that strategy. I think that's starting to start to happen. I mean, when I say we're in inning 1, inning 2, you know, we might be in inning 3 or inning 4. I mean, considering the fact that Trisha Griffith from Progressive, Warren Buffett have both said in public statements that small commercial is their number 1 priority in 2019 and moving forward. To me, that signifies a drastic move. So what I would say is next year, this time, we probably have a feel for who those major players are going to be, right? And I think there'll always be a place for independent agents. I think independent agents are still the best and most valuable model for delivering insurance. But there's a growing segment of people who aren't necessarily interested in that, which is fine. And I think the players who own that market are going to start to separate themselves. You know, I think Nationwide, Progressive, Buy Burke, Geico, you know, Travelers and Hartford seem like they're perfectly willing to kind of sit back and take their time. That feels like a mistake to me. But if either one of those 2 monsters get in the mix from a D2C model, I'd be super worried as well because they have all the capabilities, underwriting expertise, and the money to do it. So I think this is the year that they separate themselves. I think personal auto stays basically the same. I think mid and large market commercial stays the same. I don't know much about health insurance. You know, life insurance is whatever. But I think this is a big move from the commercial space, small commercial space.
Nick?
The Patriots will win the Super Bowl. Sorry, Ryan. That's going to happen. Bank it.
Yeah. The Rams will win, but that's fine.
So.
And now we know why the polar ice caps are melting. It's because Tom Brady keeps going to the friggin' Super Bowl.
That's right.
Climate change is the big issue with climate change is Tom Brady, just so everyone knows.
Yeah. My big predictions will be I think investments drying up for Insurtech.
Yeah. That's
I think it's unfortunate, but I think a lot of that has to do with tech folks that are coming in that just do not understand the business. And so they cannot communicate the value appropriately. Again, it's unfortunate. I think they're going to have to figure out different ways to get products developed, get into markets, get into proof of concepts. But the early stage stuff is going to be really difficult, drying up. And I don't know what the solution is going to be for that. I think also to tag along, I think some of the insurtechs that we've been hearing about are going to keep pivoting, and the pivot is a sign that they're in trouble. The pivots are a sign that the original market that they were going after, they made big bets, it didn't pan out, not making enough money, they're going to have to go in a different direction. I do think there's going to be a large earthquake in California. I predicted that last year, but my God, like what else could possibly happen, right? Murphy's Law. Floods.
Why do you think there's going to be a big earthquake? What's making you do that prediction?
Because everything comes in threes. Floods, wildfires, Now the earthquake's coming.
So this is astrology, or do you have
Yes,
actual like?
Of course. It's the same magic I use to predict the Patriots are going to win the Super Bowl.
Yeah. Well, Roger Goodell has a big part. I mean, Roger Goodell and Bob Kraft have a big part to do with that. I mean, that's not really predictions. That's like saying the mob is going to take control of the trucking industry. I mean, this is. So, do you really have evidence to the
No.
earthquake? Or you just-
No,
And you just continue that discussion.
I'm just throwing that out there. So it's got to come true at some point. And I hope it's not the people in LA. Let's just hope it's San Francisco. Let's just leave it like that. So those are my predictions. The Insurtech stuff's changing rapidly, but it's maturing. So for those that are coming in, it's going to be a lot harder for them. For those that are in, it'll be easier, but there's going to be a lot of pressure on them to start delivering the goods. And
what do you think about?
Watch,
do you think
one more, Ryan. One more.
Go to
Watch the MGA market.
Yeah, MGAs have MGAs are
MGA's hot stuff.
It's a big mashup mess in the MGA market right now. There's no clear winner in the MGA.
So is it better to buy a shell from Bermuda or start something from fresh?
I don't think it's a good idea to become a carrier, frankly.
I mean, not unless you have someone who understands underwriting, like under your wing.
Listen, to start an admitted carrier, let's say in the state of California, that's the only place you're going to do business, with zero premium on the books, you're going to need an excess of $10 million of capital to get that thing up and running. Where's that money coming from? And then you have to go actually get business. It could be 10 years before you return anything. And Warren Buffett said it best. Insurance is actually mediocre business. Margins are thin, return is small. You have to be strategic in this space. The business is 300 plus years old, right? Everything that you think will be tried has been tried.
What do you think about Swift?
You have to remind me.
So Swift is coastal property based on topography and wind mapping and all that kind of stuff. Their whole crux is a property risk. Today, Miami-Dade County, we're going to mark the whole thing as flood. We're not going to cover it. And what they're saying is there are properties inside that county that if we look on a more detailed map using technology and third-party data, we can actually pull properties out that are viable risks for our business.
Guys, I'm very sorry to cut the conversation at this point, but this is the end of our talk. I wish that we can continue because it's actually very interesting to hear you, not fighting, but actually having a very wonderful discussion about it.
Arm wrestle.
Yeah, let's do that from.
All right, thanks, guys. I apologize again for not being there in person. I apologize, guys.
Yeah, we need to do like that. Thank you very much for coming in. From flying in, having the council, all that stress, and of course, Nick, for.
Can I go to sleep now?
Yes.
Bye, guys. Thank you. Hey, boldpenguin.com. Go to boldpenguin.com. That's boldpenguin.com. And go see Neil. Neil bought the pizza.
Hey, guys.
Thanks.
Take care. Ryan, thank you.
Guys.